Hi, I'm Jimmy. In this video, we're going to look quickly at the S&P 500 and how overvalued is the stock market. So we've been doing a couple investing live streams over in our private investing community, and people have been, because the stock market has been tumbling, as we can see, it's been down a decent amount. Well, this is just year to date. It's down over 9% year to date, and I'm not sure where the market's going to open today, but I figure I could bring you a little bit of insight as to where the stock market could fall to, what a more fair value of the market could be. We'll do this fairly quickly in today's somewhat unedited type of video. Okay, so first up, we've got, this is year-to-date down 9%. I think we should keep in perspective, though, that over the long run, the S&P continues to climb higher. Look at how small this actual dip is. The dip is quite small. Now, we could also argue, look at how much it ramped up. Was it overvalued? With that in mind, when we look at the current PE, it's just short of 24 times earnings. So that is, we pay $23.70 for every $1 for the average of the S&P 500. That is quite high. The average over the past 10 years, or the long-term historical average, let's put it that way, is about 20x. We can see that we're a far cry away from that. It is possible the S&P falls down to about, call it 3,600, give or take, to get it back to what would be perceived to be long-term fair value. Especially if one of the things keeping the market higher for a long time has been the Federal Reserve and low interest rates. Many people are expecting for that to reverse. If the Fed's hand stops being there guiding the market higher, does it come back to the average, perhaps even lower? It's possible. Well, I also want to point out that as a value investor, if you're a value investor, well, something like 17x, 17.5x for the S&P, well, we can see that we've had a few different opportunities to invest. I'm not talking actively to trade. I'm talking jump in, buy it, hold it for the long term, and wait for the next opportunity. So it's not like that never happens. More realistically, the 20x is more likely where people are going to go. But then on the high end, if we go up about 2.5x, 22x, you can see the stock market still looks like it has room to fall. That would imply that the market should be around the $4,100 level if we think 22.5 times earnings, a PE ratio of 22.5 times, is more reasonable than the current level. Well, the stock market should continue to fall to about 4,100. Now, this doesn't necessarily mean it's going to fall every single day. It could be up today and down tomorrow, but it's possible in a month we end up, or in a week, or whatever it is, we end up back either near, I think either near the 20x average or the 22.5x. Then, right now, we just crossed below 25x. This pullback that happened in the market over the past week, it's been down most days. Well, that pullback was very called for. Look at how overvalued this market got. It was trading more than 25 times earnings, and that is quite high compared to the S&P's own long-term average. So right now, it just most recently dropped below that, which, yes, I think it is, obviously, it's difficult to be an investor when the stock market is pulling back. But I do think it's important. This is why we keep a bullpen of stocks. This is why we keep doing deep dives on different companies to research them, to better understand them. So when we get the pullback, if this stock market pulls back, what if it goes all the way back down to the green line here, which is the long-term average? What if it goes back to 20x? Well, we got to be ready for that. One, we want our current investments to hold up okay, so hopefully we bought them at a good value. But we also want to be ready for the possibility of jumping into companies that maybe have seemed overpriced. Now, if we're looking for a way to build up our bullpen of stocks, our potential good investment ideas, well, one thing that we're working on in our private investing community is building a website that will work something like this. So Microsoft was a stock that we were looking at last night on the live stream we were doing with that community, but a stock like Apple, well, we punch in the ticker, it takes analyst estimates going out the next few years, gives us a fair value. If the stock market keeps falling back, it's very possible a stock like this is fantastic. Or maybe we look at a stock like Foot Locker. That keeps coming up in the investment community. We're doing deep dives on it. This stock looks like it could be undervalued now, and if we can get a stock that's undervalued, well, that could be a way to outperform the market over the long run. So if you'd like to get access to the investing community and ultimately to this website once it comes live, we're expecting to have this up in the next 6 months or so, first half of this year, it should be up and running. If you come over and sign up today, we will lock in the price. The price will never go up on you. Besides that, try to stay sane. Don't be too reactive to what the market is doing, especially if it's down. Just keep hunting for good opportunities. Thanks, and I'll see you in the next video.